Thank you. After such an introduction, I myself wonder what I'm going to say. And I'm very happy to be here, and I'm very happy that you are here, because after all, there's nothing else on the program. Therefore, I assume that you're here to hear me. That's remarkable. I appreciate this. I'm very happy to see so many young economists. I'm really impressed about the level of knowledge he has seen here today and yesterday. Now, which speaks well for the future of the Austrian school. As a matter of fact, if you compare the number of young economists with the old-timers, then you see that the number of younger economists is far greater than the older generation, which is an indication of things to come, of the future of the Austrian school and the future of economic knowledge in the United States. You see the future right here, and I appreciate it. I think it's very proper that at a meeting, at a convention like this, that one should talk about the founder of the Austrian school, about Karl Menger. After all, it all began more than 100 years ago with Karl Menger, who in 1871 published a brilliant book, a very thin one, about the principles of economics. And in this thin book of some 8 chapters, he laid the foundation of a new school of economics that emerged from the classical economics, laying the foundation for the subjective value theory, and at the same time also presenting a theory of the origin of money. He became famous not so much because it was a bestseller immediately. It did not. It was not a bestseller. But immediately, knowledgeable people, scholars, saw its importance and began to use the ideas and the principles, and thus made him eminent, famous in short order. But this was all just 12 years later, in 1883. He came out with a publication. It was called the Inquiries about the Method of Knowledge, Method of Economics and Political Science in particular, which in English was translated to the Problems of Economics and Sociology, in which he attacked the German historical school, in which he raised the question of the method of knowledge. How do we know? Which then launched the debate, the argument of the century, the Methodenstreit, the argument about method, waging war, declaring war on the German historical school and the method of knowledge which it comprised. He became famous and was the leading Austrian economist. I should also say that at that time, or shortly before, he had earned a full professorship at the University of Vienna, and at one time, for some 2 years, he had been the tutor of the Crown Prince of Austria, Rudolf, who later, unfortunately, committed suicide. Well, the world knows all this about the 2 tremendous contributions made by Menger to economic knowledge. At first, the principles of economics, and later, 12 years later, his presentation of a method of economics, the deductive, theoretical approach to economic knowledge. But very little is known of his monetary writings, because a few years later, beginning in 1889, he came out with some 7 major essays dealing with monetary thought. Very little is known of this monetary thought by Karl Menger, although in his monetary writings he too laid the foundation for the monetary writings and the development of modern monetary thought to come, especially a few years later in 1904 with Wiese, eminent Austrian economist, and then 1912 in the publications by Ludwig von Mises. But these monetary writings later were overshadowed by these other economists, but nevertheless they laid the foundation for monetary thought to come. And as a matter of fact, I'm fully convinced that in the coming years, perhaps in a decade, his writings will become all the more important. It's unfortunate that they're only available in German. They've never been translated. I think in the coming years they will become more important than ever, because they are not just laying the foundation for some monetary thought and the foundation for monetary theory, but at the same time we're dealing with an important issue. That partly was the reason for his feverish writing, the preparation of those monetary essays. And this issue was the forthcoming currency reform. In 1892, Austria-Hungary conducted a currency reform. Karl Menger saw this opportunity and he became the prime mover of this reform, bringing forth, introducing the gold standard. That's very meaningful for us and may become very meaningful for us in the future. And he saw this opportunity beginning in 1889, and thus there was a rash of writings. Beginning in 1889, the currency reform was conducted in August of 1892. Up till that time, he was pushing for the currency reform, the adoption, the introduction of the gold standard. And thereafter, about a year later, in 1893, there was this last monetary writings, criticizing the blunders, the mistakes made in the currency reform. These are most valuable writings dealing with currency reform. That's why I'm saying that perhaps in the coming years, the Menger writings on currency reform, introduction of the gold standard, may become important for us in the coming years. And at that time, Austria was on a silver standard. Menger called it a limping silver standard. Austria was operating under an old act of 1859 which had established a silver standard. But as you undoubtedly know, in those years, beginning in the 1870s and even earlier, there was a massive mining of silver all over the world, especially in the United States and then later also in Mexico. And as a result of this massive supply of silver coming to the markets, silver was declining relative to other prices and declining especially relative to gold. And Austria being on the silver standard. If that had continued under the silver standard, then Austrian prices stated in silver would have risen significantly. And there would have been a silver inflation with all the consequences of inflation. You see, you can have inflation even if you don't have paper money. In this case, there was the beginning of a silver inflation in the early 70s in Austria-Hungary. Thereafter, then in 1879, the Austrian government had decreed the suspension of silver minting. It had closed the mint. And then, as a result of this closing the mint in 1879, there had been a very interesting situation. The silver continued to fall to a discount, and the paper money, the guilder, went to a premium. And why? Because in the meantime, with the given supply, a quantity of paper money, the money-based silver becoming cheaper and cheaper. If there had been a silver standard, then surely through the continuous minting of silver coins, silver prices would have risen because of the depreciation of the metal value. But because of the suspension of minting in 1879, the guilder, the silver guilder paper money had risen to a premium. As a matter of fact, it had risen to a 20% premium. Now, Karl Menger was greatly alarmed about this situation, about the separation of the metal from the currency, from the paper currency, the monetary substitutes. with the monetary substitute selling at a 20% premium. This is difficult to imagine for us. Surely, normally, it's the paper money that goes to a discount. But there's an example of paper money going to a premium. By the way, it happened again later during World War I, when the paper money in Sweden went to a premium over gold, by the way, because the gold of Europe at that time was flowing into Sweden and gold going to a discount. There too, later in World War I, then the Swedish government suspended the minting, the free minting, the redeemability of the currency, and therefore there too, gold went to a discount and the paper money of Sweden then went to a premium. Now this happened now in the 1880s in Austria. Now with silver going to a discount and the paper guilder going to a premium, to a 20% premium. And Karl Menger was greatly alarmed about this because he said, at any time there may be a resumption of minting, which then will lead to a 20% boost in prices, which then will lead all to the evil effects of inflation. That means the creditors will lose and the debtors will gain, and there will be a massive transfer of wealth as a result of this new minting of silver and silver coins and the changing prices. And he was greatly alarmed about this. Therefore, because of the evils of the silver standard, he was pleading for a gold standard. Therefore, he became the first advocate, the champion of the gold standard. And he published in a number of vast publications, beginning in 1889, he wrote an essay on the purchasing power of the Austrian guilder. Then in 1892, wrote a lengthy essay about money. As I mentioned, all these are only available in the German language. Now, and then he wrote a number of essays about the introduction of a new currency or the transition to a gold standard. Then another essay about our currency. And finally, a year after the currency reform of August of 1892, he published then the final essay on money, now talking about the gold premium and the present condition, the present state of our currency after the currency reform. Well, I would like to, here I presented the paper, but here in my presentation here, I just would like to concentrate on one particular issue, the issue of the currency reform. As a matter of fact, in Austria in 1892, the Austrian government had convened a currency commission. And in May of 1892, there was a currency commission inquiring about the possibilities of a conversion or of a transition to the gold standard from that limping silver standard. And Menger there was the prime witness at that hearing of the Gold Commission in Austrian Vienna in May of 1892. But in contrast to our hearings last year here, you may remember here we had a Gold Commission here, now and at which time then the Gold Commission invited some 24, 25 expert witnesses, and these 24, 25 witnesses here last year, now then I think about 3 or 4 all invited by Congressman Rand Paul in favor of gold and all others against gold. You must remember this here. But in Austria, in Vienna in 1892, now the commission consisted of a number of bankers, eminent bankers, and lots of civil servants. Then there were about half a dozen expert witnesses, of whom Karl Menger was the most important one. And there the currency commission at that time didn't give free hand to the experts. It presented the experts with 5 questions. Now, they all had to address themselves to 5 questions. The first question presented to the expert, and Menger testified on these questions. The first one, why should there be a gold standard? That was the first question. the question of the standards. The second question presented to the Commission was the question, well, if it should be the gold standard, should there also be silver coins? Should silver coins be permissible? The third question was, well, and if that should be the gold standard, should there be treasury notes, non-legal tender, non-interest-bearing treasury notes be circulating with the rest of the currency? In other words, should the government be free to issue its treasury note as monetary substitute? Then the fourth question presented to the committee was the most difficult one, the most important one, the question of the exchange rate. What should the rate be? How should we handle the exchange from one currency, the old currency, the silver currency, to the new currency? What should be the exchange rate? And the fifth and last question presented to the experts by the Currency Commission was the question of the unit. What should be the unit, the new unit of our currency? As far as the first question was concerned about the gold standard, why should we have a gold standard? Karl Menger answered this. He said, well, it's the standard of civilization, the standard of the civilized nations. All industrial nations have it. Those who don't have it, those who have a silver standard, are second-class nations. We called Austria a second-class nation. It's the standard of civilization. Moreover, he said, all the others have it, and if we don't have it, then our dealings with gold standard countries are very difficult, because every transaction becomes a double business, becomes speculative. An Austrian who has to buy something in the world, on the gold standard, no, he has, it's not just the purchase of a commodity, of an item, but at the same time it becomes also a transaction, a speculative transaction of money. It's double business, very difficult. Therefore, our prices then tend to be higher, our interest rates tend to be higher as a result of this difficulty of trading with the rest of the world. And moreover, again, he pointed at the shortcomings of the silver standard, the possibility of sudden redemption, sudden minting of more coins, which will lead to a 20% fall in the purchasing power of the currency, and once again all the other inflationary effects. Therefore, he concluded that we must have the gold standard. The gold standard is the standard of the world. However, he warned about one aspect of the gold standard, saying, well, if we suddenly, in Austria-Hungary is a power, is an important nation. At that time, Austria-Hungary had a population of 45 million, very similar to the population of Great Britain and Germany. It was a power. If such a power should suddenly adopt the gold standard, this would constitute a huge demand for gold and raise its price, raise its purchasing power in the world markets, which will lead to falling prices all over the gold standard countries, depressing prices, wages everywhere. Therefore, he always warned, he said, this must not happen. When we convert to gold, we must not depress the world market. We must not depress other countries through this, our sudden demand. As a matter of fact, he calculated the demand too. He talked about 600,000 kilos of gold needed for Austria. And this sudden demand for gold would raise its value in the purchasing power in the gold markets of the world. This being money, it would have results, it would have consequences all over the world. Therefore, it was a question of great concern for him to prevent the consequences, such consequences, on the rest of the world. But nevertheless, he pleaded, remember what I said earlier, he was the prime force for the introduction of the gold standard. As far as the second question was concerned, should there be silver coins under the gold standard? His answer was in the affirmative. As a matter of fact, he said, well, it doesn't make any difference, surely, he said, surely he was aware of two principles of money. One, there's the principle, the Gresham's law. Now, that means if you have two types of money, gold coins and silver coins, and according to Gresham's law, then the bad money will drive out the good money if there is a fixed exchange rate. No, that's merely an application of the principle of our knowledge of the consequences of price fixing. Gresham's law applied to money. Therefore, bad money will drive out good money. But according to Menger, this was not applicable because there's another principle of the value of money, of two kinds of money, the principle of substitution, that actually as long as silver would be redeemable in gold, it would receive its value from gold. In other words, the principle of substitution, which we surely would agree with. That as long as it doesn't make any difference, what the material of the monetary substitute may consist of, whether it's paper money or whether it's silver, as long as it is redeemable on demand, it will receive its value from the money proper, in this case, from gold. Of course, it should be silver coins, should be issued, should be circulating in limited quantities. Menger never addressed himself to the question of how large those quantities were supposed to be. And he just talked about the reasonable quantity of silver coins receiving their value through free redemption, receiving their value from the money proper from the gold coins. And therefore, his answer to the second question about silver coins was in the affirmative. And he gave the same answer also to the third question addressed to him by the Currency Commission there, and he testifying before the Currency Commission. Should there be or could there be an issue of paper money by the Treasury, by the government Treasury? Non-interest bearing, freely redeemable Treasury notes. And his answer is there's no objection to, because such an issue of paper money, not when freely redeemable, from a technical point of view, he said, and he emphasized this, from a technical point of view, there would be no objection to some issue of irredeemable Treasury notes, functioning as money. Because we would call this, fiduciary expansion of notes, which would affect the value of money, surely. As a matter of fact, Karl Menger, he said, from a technical point of view, there can be no objection to such an issue of notes. And in fact, he offered to calculate the quantity of Treasury notes which the money market could handle, could absorb. He mentioned, for instance, that the budget of the federal government of Hungary and Austria combined was about 1 billion guilders. He calculated as well, he said it would be not much of an objection, and the market could handle about 10% of this. That means an annual issue of about 100 million in guilders issued by the Treasury as fiduciary money. From a technical point of view. He never entered in any other discussion. When you listen to them, when you read this, you see him, he's speaking like a politician. He's trying to make this gold standard, which is urging on these politicians, on the members of the Gold Commission. No, he's trying to make it palatable. He's trying to sell the gold standard. Therefore, he's trying to say that it can be done. You can use silver money, you can issue treasury bills, it can be done. He didn't go into the details of the consequences. He merely raised the question of, can it be done from a technical point of view? And his answer was yes. And finally, the fourth question, of course, is the most difficult. The difficult one. The fourth question about the exchange rate. between the new money and the old money in the moment of currency reform is, of course, the meat of the reform, the ultimate question of the reform. What should be the exchange rate between the new currency and the old currency? That's going to be an important question for us someday, later in the 1980s, perhaps 1990s. In fact, I sometimes wonder, this happened in 1892. I wonder whether we won't be here and discussing the same in 1992. About the currency reform, the ultimate question of the exchange rate. What should the exchange rate be? And there Menger answered this, which was very remarkable, I thought. He said, we must have a just rate, invoking justice, a just rate of exchange, seeking a just rate. Then he defined this just rate. What is the just rate there? He defined the just rate as the rate in the money markets where free people in the money market could buy for the old money a given quantity of new money. That's just. Taking the exchange rate from the money markets, which of course raises then a number of questions. Is that the purchasing power? After all, when it comes to money, the ultimate question of the value of money is the objective exchange rate or the purchasing power. Is that an indication of the purchasing power to go to the rates of the money market? That's the question. As a matter of fact, at this hearing, there was a cross-examination, a tough one, where the commissioners became even personal and attacked him personally. And on this very point of the just rate of exchange, and Menger had a hard time, because they pointed out some questions and some contradictions. They asked, for instance, well, is that a just rate? How about if there's a difference between the money market rate, let's say, and the purchasing power when it comes for the people? The consumer rate, for instance, the purchasing power of the money for consumers. Surely isn't that an important consideration? The commissioners asked. And there he made concessions. He said, well, considering the future, and there has to be a debt conversion of old debt into new debt at this exchange rate. But the old debt was depreciating, based on silver. The new debt based on gold would probably appreciate. Therefore, Menger offered to allow for this and correct the exchange rate, which then became very arbitrary. He was on thin ice there. As a matter of fact, when you look at this, and this is the very meat of any currency reform, the question of the exchange rate, the just rate, and I like this idea of a just rate. But then what is the just rate? There's not only the rate, the exchange rate of the money markets, but then there's the exchange rate, let's say, of the consumer market. What is the value of the purchasing power of the old money in the consumer market, in the free market price? And if there's a difference between the money rates and the consumer rates, where is it? As a matter of fact, when you look at the consumer rate, at the purchasing power in consumer prices, as reflected in consumer prices, there are many parts of the economy where you don't have free prices. And I'm thinking of public utilities and other industries suffering from government intervention, from government regulation of rates and prices, which are not part of the free market rates. Therefore, which do you take? Do you allow for that part of the economy where there is no free market? How do you allow for this? And finally, you may have black market rates in the years to come. You may have underground economy rates and prices. Where do you take? From what market do you take your exchange rate? What is the just rate of reform? I finally came to the conclusion that it can't be done. There is no such just rate. I don't think it can be found anywhere. Therefore, if that's true, that there cannot be a just rate ever, now then I think such a legislated currency reform can never be just. It cannot be done. Therefore, there can only be other reforms. After all, what are the ways of currency reform in the past? We can think of 3 types of currency reform lists in the past. There's one based on freedom leading to a parallel standard of different types of money. Parallel standard. Pure freedom leading to a parallel standard, free standards of different types of money. Being used freely, side by side, without any legal exchange rates. That's a parallel standard. There's one way. Now, another way in the past, and how great nations in the past got to the gold standard, was mostly through the bimetallic standard. What's the bimetallic standard? In the United States began in 1792 with the bimetallic standard, as you know. That's the stipulation that both gold and silver constitute money. And government then fixed the rates of the two. It's a kind of a price fixing. Of course, the bimetallic standard never works because it's based on price fixing. Now, in 1792, the rate was fixed at 15 to 1, and very soon, as you know, it led to a de facto silver standard. The bimetallic standard always fails through that fixing the rates, which then always leads to the disappearance of the undervalued currency, and it leads to the operation of Gresham's law. Thus, until the 1830s, the United States had a silver standard, as you know. Later on, then by legislation in 1834, this rate was changed, the value of the silver dollar was reduced, which then in time led to the gold standard. The de facto gold standard. Legally, the United States still had been on the bimetallic standard. I'm trying to say that the great nations, by the way, Great Britain, too, got to the gold standard via the failure of the bimetallic standard 100 years earlier, surely. But it was the failure of the bimetallic standard, the fixing of rates between one and the other, and then leading to the de facto gold standard or the silver standard. That was one method or one approach to the gold standard. And finally, there are three ways. One is just the substitution, the legislation, which Austria embarked upon in 1792. I call it the catch-up method. Later on, the nation like Germany, too, in 1875, just legislated the gold standard, conducting a currency reform. Now, and thus wanting to replace or legislating the replacement of silver coins through gold coins. Now, while looking at these possibilities of reform, I think I've come to the conclusion that it's only in freedom, only through the parallel standard can there be ever a just currency reform introducing a new currency. The question of just rate is the meat of a currency reform. Therefore, we have to address ourselves. And I'm trying to say here that if we ever should have to cope with this question in these halls in the years to come, we better study what Menger had to say. We may not base our conclusions on Menger, may not come to the same conclusions, but I do believe that Menger laid the foundation for any intelligent discussion of a currency reform. And finally, let me come to the fifth question put to the expert witnesses, the question of unit. What should the unit of currency be? Well, Menger said, well, that's a very simple question. The unit should not be too large, it should not be too small, it should be determined by the markets. The people will determine the size of the most convenient size of the unit of currency. They, as a matter of fact, he said, well, our guilder is not bad, however, we probably should have half a guilder, slightly on the large size or unit of currency. Let's have half a guilder, perhaps we can call it the crown. As a matter of fact, then, according to the currency reform of August of 1892, then the government introduced cut the basic unit in half and introduced a new unit, the crown, which, by the way, became a very famous unit. It was called coronas. I don't know whether you're aware of this. You know that even today you can buy gold coins, coronas. You know, they are little gold coins, Reichsstreiks, issued by Austria and Hungary, about the size of a dime, the favorite gold coin today for the investor. As a matter of fact, here at Grove City College, my colleagues over the years, over the last 10 years, probably bought hundreds, if not thousands, of these little gold coins called coronas. Used to buy them, the economics department buys them in the capsules, 100 at a time. And that's a very excellent coin for poor college professors. And I listened to you talking about South African coins, Krugerrands, 1 ounce of gold. You're in a different class from us here. At my college, the professors buy 1/10 of an ounce of gold, and that's an Austrian corona. And as a matter of fact, this Austrian corona was recommended by Menger. I doubt that anyone at my college, except the economics department, is aware of the fact that this was a product, the creation of the mind of this genius, Karl Menger. But today, that's our favorite investment at my college, the Austrian corona. Befitting our income, a professor of economics may buy 100, then go to the coffee table, and then sell. He can sell 1/10 of an ounce, a corona. No, that's 1/10 of an ounce. No, he used to sell them for $10, $12, $15. Of course, today, with gold at $380 an ounce or $400 an ounce, the corona is selling about $40 an ounce. But at $40 an ounce, the professor of economics can make a sale of a gold coin, probably earning 50 cents, get buying in quantity and putting the gold coins in a plastic cover, and then marketing at the coffee table, marketing the coronas for $40, probably earning 50 cents on the sale of a gold coin. The point I'm trying to make is that this was the creation of Karl Menger from way back, his contribution to thought and policy in 1892. Well, a year later, the currency reform was conducted in August of 1892, and about a year later, Karl Menger presented his last monetary essay, reviewing the reform, stating his disappointment and the blunders committed during the reform legislation and reform action. And what was the complaint? He said, well, at the very beginning, after August of 1892, at the very beginning, after the legislation, everything was excellent and gold was rushing in. More than half the gold coming into Austria after the currency reform of August of 1892, more than half the gold came from the United States, consisting of American eagles. I should add, and perhaps I should go back to the United States and look at conditions here. You know, in 1890 there had been the Silver Purchase Act, Sherman Silver Purchase Act, forcing the U.S. Treasury to mint lots of silver dollars or issue legal tender silver certificates month after month. Now here was heavy minting of silver and issue of paper of silver certificates after July of 1890, the passage of the Sherman Silver Purchase Act, leading to the silver inflation, to the operation of Gresham's Law, gold leaving the United States fast and appearing in Austria, which in 92 had conducted the reform. More than half, let me repeat here, more than half of the gold arriving in Austria consisted of American double eagles. No. While Austria tried to get to the gold standard, attract gold coins, attract gold, the United States was pushing it out through the Silver Purchase Act, the Sherman Silver Purchase Act. I think it's a kind of an irony nowadays, thinking back, it supports another economic principle, another statement pertaining to gold, that gold is never lost, it merely changes form throughout the centuries and thousands of years, it merely changes form. In 1890s, the double eagles became coronas in Austria. And 2 generations later, the professors in Grove City College are buying Austrian coronas, coming back to the United States. I'm not implying that we are getting the eagles back, but perhaps some eagles returning to the United States. Eagles, these gold, the $10 gold coins. I'm talking about the eagles. Lost after 1890, perhaps some of those may have returned to Grove City, or perhaps to your gold holdings. But the currency reform of 1892, according to Menger, was badly bungled. What happened soon after, a few months after the reform, the Austrian government, so being mindful of the consequences of its reform on the price of gold in the world markets, trying to be mindful and considerate of the world markets, it needed gold now in order to convert, in order to make gold payments after the reform, and it was announced that full redemption should take place in 1896, January 1st, 1896 and 1897. But in preparation for this, Austria needed gold. And so what did the government do? And the central bank, it bought gold in the domestic markets, practically in the domestic markets only. Surely small quantities were raised also in Belgium and France and England and some other countries. But most of it was taken from the domestic markets. And according to Menger, very soon the domestic markets were pumped dry. He used the term pumping dry, of gold and foreign exchange payable in gold. Moreover, the central bank got into action and buying up gold from the domestic market, which today we would call open market purchases. And in the case of open market purchases, in this case buying up the gold and releasing cash, it was flooding the money markets with cash, with paper money, expanding money, paper money, and credit, inflating, so to speak, which by the beginning of 1893, was frightening all international markets. Before you know it, the guilder, the paper money, fell to a discount of some 3%, which according to Menger was the ultimate disaster of currency reform. Having embarked upon a reform, trying to exchange new money for old money, trying to establish the given market rate, finding the market rate, the just rate, And then, wanting to resume, commence gold payments, full redemption, he finds that in short order there's distrust, fear. The Austrian paper money went to a discount. And that was his last contribution to knowledge, his last essay, published in the summer of 1893, despairing about his country. He said, there's not any reform, there can be no continuation of this. No, we declare a gold standard, try to adopt a gold standard, and within a few months our paper money is going to a discount. There's no way we can resume payment. There cannot be any gold payment with paper money at a discount or gold at a premium, at a 3% premium. In other words, he didn't describe this expansion of fiduciary credit the way Mises would have done many years later, but he just talked about this drying up, the absorption of funds, of gold funds, from the Viennese market. And leading to a discount of paper money. An excellent, brilliant discussion which led him to despair about his country and his countrymen. And in this particular respect, I think Professor Mises was totally different from Menger. Surely when you search for the beginning of knowledge, Austrian knowledge, you have to go to Menger. When you search for the beginning of monetary knowledge, and especially the knowledge of currency reform under difficult conditions, you have to go to Karl Menger. But when it comes to attitude, the philosophy of life, we may not want to imitate Karl Menger. Because Karl Menger, soon after this currency reform conducted in 1993, there was practically this monetary essay of 1993 about the premium of gold and the state of currency in Austria-Hungary. That was practically his last scholarly publication. Shortly thereafter, he published a number of book reviews. And then there were other new editions of old essays about money, the famous essay on money. There were two more editions, but the last one in 1910, surely. But thereafter, practically after 1893, Karl Menger withdrew in despair, clearly seeing the future of his beloved Austria and the future of Europe, the decline of what he called decline of European civilization. He withdrew in despair and withdrew from active life. He retired early at that time in 1893. He was just 53 years old. He served a few more years as a professor of economics at the University of Vienna, but then he retired early. And after this, after 1893, he lived more than 30 years. But he did not continue. He despaired about the future of Austria and despaired about the future of society, and then withdrew from life and productivity. In this respect, I think Professor Mises was entirely different. Mises, being desperate too and despairing about mankind at times, but his motto and his principle was always to continue and to fight as long as he lived, to uphold the principle and uphold the light, even in the darkest moments of contemporary economic life and policy. Mises was the champion, the fighter, to the last day of his life. And there, I think, we can learn from Mises. That must be our goal and our dedication. And therefore, I'm very happy that this society is not a Menger society, because Menger withdrew from life, despairing about life. This is a Mises society, named after a great champion of freedom and a free society. Thank you very much.
We now have 10 minutes for questions, and then we will end at precisely 5:30.
According to my watch, we have 5 minutes. Yes.
The Jesus school kind of get together with the Henry Jewish school. I don't know how familiar folks are with Henry Jewish, but
We have again and again, and I'm not about to repeat that here. Now we are dealing with money and gold and the gold standard. Henry George didn't deal with the gold standard, at least didn't make any contribution to the gold standard. And therefore I think that question is not pertinent, is it? Yeah.
You put me on the spot. I do think that within the narrow confines of this conference, that the question is gold standard, but in a broader sense, it's a question of free markets. Gold is only one vestige of free markets. While it might be fruitful to get together Misesians and Georges, I think that's an agenda for another conference.
Yes. As a matter of fact, I would like to recognize only questions about my presentation here. Carl Menger, please, not Henry George. Yes, sir.
You mentioned the presentation that there is no English translation.
Not that I know. Of these monetary writings, the two other works, the Principles, of course, has been translated in dozens of languages, and his Methodenstreit, his fight about method, is known all over the world. It's still being fought today, and many of you here, the younger economists, are sometimes preoccupied with the Methodenstreit of the 1880s, I think. So that's well known. But his monetary writings, I've never seen any references to his monetary writings, undoubtedly because they were overshadowed by Visa and Mises. That's my explanation. No, why not a younger here? Some unemployed younger economist. No, I have other things to do.
Did Menger despair because he couldn't find enough disciples at this time for the government to go on?
Oh, I doubt that he despaired about the lack of disciples. He probably had more disciples than anyone else, That's how, after all, that's how he became the famous Menger, through his disciples. His own works, Principles didn't become a bestseller. It's only through his disciples that he became the founder of the Austrian school. But I think he saw the future of mankind. He saw the inflation, he saw the wars. By the way, there's an excellent discussion of Menger in Mises' memoirs. We find there's a chapter on Austrian economics in Mises' Notes and Recollections. That's his memoirs. You'll find an excellent discussion on Menger here. I'm not a contemporary of Menger, so I have to dig it up, dig out information from other writers. Although I was around when Menger was an old man, but at that time I wasn't studying economics. I never met him. Yes, sir.
we go to a gold standard. I think we're going to have a problem. We try to equate that gold standard with our present thing called the dollar. I don't know what it is, the dollar, to be honest with you. It seems to me we're going to have to call something else and go to call the new dollar or something, because I can see great problems. People sitting down trying to figure out how many Federal Reserve dollars are going to replace.
That's fine.
Don't you agree with that?
All right, yes. Yes, I tried to say that, and I tried to say too that Menger had a hard time with the exchange rate. I came to the conclusion there cannot be. What is the just exchange rate? There are half a dozen possibilities, and finally you have to correct the exchange rate, you have to compromise somewhere, and I finally concluded that it can't be done. The only way to establish an exchange rate would be through total freedom, what I call the parallel standard, between paper money and gold, or freedom, abolition of the legal tender laws and free money markets.
Let the Federal Reserve notes get the value whatever the market says they are.
Yeah, whatever the market, what is the market? Is the money market, the bond market, is it consumer's market, or is it the controlled market, is it the black market, is it the underground market? No, what is it? That's the question of the exchange rate. Which one? You will never have, I think, will never have complete freedom there. By the way, surely we should, that's how Menger started out, searching for a just rate, taking it from the money market of the present, of the moment. He wanted to go to the Viennese money market of the moment, of the day of reform, and accept the exchange rate of the money market. And then, having some doubts about the future of the medium of exchange, gold versus silver in the past, then he wanted to allow for some correction, deviating there from the money market rate of the day of currency reform. And then he wanted to change a little and talk about a slightly lighter guildum. In other words, became rather arbitrary there, and I thought he got stuck there in something that couldn't be solved. Sure. And therefore, I concluded any legislated reform will always be arbitrary, will never be just. It probably may happen, surely may happen sometime in the future. Legislated reform and exchange of blue backs for greenbacks, or red backs for greenbacks. It may happen sometime.
We have time for one last quick question.
Yes, sir, the last question.
In a free market, can there only be one value? In other words, you can't have a black market and a free market because since money can be freely exchanged, there's no need for a black market. And wouldn't that be true even in the money market? The money market can only use the value established by the consumer when money is right.
I agree. In the ideal world, you're surely right, but ours is not the ideal world. In our world, you do have confiscatory taxation, you have force, you have coercion in the money markets, in the banking system, the financial institutions are not free. Therefore, you do have an underground economy. Therefore, you do have different exchange rates and different objective exchange rates and purchasing power of the money in the underground economy. And moreover, you're in the underground, then you have to, you can't look at the underground exchange rate either, because if there were freedom now, then the underground economy purchasing power would be, the free purchasing power would be different there would be a difference once again, from the underground economy versus then the free economy there. Don't know whether I made a point, But I tried to make a point. It becomes very difficult there. And then finally, the only conclusion I came up with is there can only be a just reform must be a totally free reform. Only in freedom there can be justice.
Thank you, Professor Sennholz. Thank you all for attending.